If you're watching this, you probably know about the Forex dreams. Influencers in Lambos, screens full of charts. I make 100,000 a month for my phone, just drawing lines. And then, of course, they sell you the course on how you can do the same. 2 years ago, I went all in on Forex. I dedicated an entire year to it. I read books by famous Wall Street traders. I studied algorithmic trading. I bought MT4 trading bots. I wrote my own trading algorithms. I learned all the chart patterns and all the candlesticks and all the formations, and I did all the backtestings. I watched my own brother dive deep into trading using prop firms. I even started a YouTube channel on automated trading. And after all that, the conclusion is simple and painful. It is not worth it. Most gurus are lying to you. You are basically gambling with your money. Your odds of long-term success are close to zero, and you'll probably lose everything. Let me explain how I got there. If you read most blogs or books, trading looks very simple. You are told price moves in patterns. Candles form shapes, and these patterns, they repeat. And once you can read the chart, you can predict what comes next. You learn that certain patterns are bullish, which means price will likely go up, and other patterns are bearish, which means price will likely go down. You just need to long, which means bet up, or short, which means bet down at the right time. So if it sounds very logical, you see a pattern, you place the trade, then you take profit. And if it were truly that simple, everyone would be a trader and everyone will have a Lambo. But in real life, that's what actually happens. The first problem is the same chart tells you opposite stories. There are so many chart patterns that you can fit almost anything into something. You look at one chart, the first pattern says sell, but the second pattern says buy. So the same price movement, completely opposite signals. So what do you do? At that point, we are not reading the market, we are just guessing. The problem number two is the time frames confuse everything, because you change the time frame on the 15-minute chart, you get a sell signal. You change it to a 1-hour chart, and the asset is showing you a buy signal. So which one is right? Again, you are guessing. You can always find a time frame that proves what you already want to do. And the problem 3 is that stop losses is like a death by 1,000 cuts. So even if you get the direction right, you still have to choose an entry point, choose a stop loss, choose a take profit. And if price hits your stop loss first, even if you were right about the direction, you will still lose your money. And this happens a lot. And number 4 is that you have to be consistently right, which you would not be. Making money once or twice is easy, right? The real challenge is the consistency. To be one of those people making big money, you can't just win sometimes. You need to win consistently over hundreds of trades. But in reality, we might win 2 trades and lose 3. Then you win 1 and you lose 4. You have this random streaks of wins and losses. You need an edge that actually survives different market conditions, different months, and different years. Most people will never get there. Problem number 5 is that you need serious money to make real money. The numbers are not what Instagram makes them look like. To make, for example, $1,000 a month, you might realistically need something like 10,000 to 20,000 in trading capital. And in that process of chasing 1,000, you might easily lose half of your money, like 5,000. You are risking a lot for returns you could have gotten in a simpler, much less stressful way. And problem number 6 is time and attention prison. Forex is time sensitive. Entries have to be timed just right. If you miss the setup, it's gone. You might wait for hours and days or even weeks to see another good setup. This means that you are constantly checking charts, you are staring at screens during trading hours, you are living in a state of almost about to trade. Imagine building an entire life around waiting for a candle to form properly. And problem number 7 is the emotional damage. Now, add emotions on top of these things. Imagine you have saved up $10,000. Your first trade, you lose 500. The second trade, you are trying to recover it, you lose another 500. The third trade, you finally win 500 back. So you feel confident. You feel, oh, okay, I can do the next one. Then the fourth trade, you probably got to go heavier, to make 1,000 so that you can break even and even make profit. But what happens? You lose it, and now you are at 8,500. So imagine you repeat this roller coaster a few times, and your heart starts pounding every time you want to buy, click, or sell. Your sleep gets affected. You start obsessing over charts. Your entire mood depends on green and red candles. That's a lot of financial stress and emotional punishment. Okay, let us automate it, which is what I did, which is the natural response is that if I automate it, I can remove the emotions. I can just write code and let code do all these things, check the chart and take trades. So as a software engineer, that's exactly what I thought and I did. So I learned PineScript, I learned MQL5, I built indicators and strategies. I tried to code the patterns and the rules, and this was where things got clear to me. Because when you try to code, you realize price movement is incredibly random. Patterns are not repeatable as they look on screenshots. Screenshots are just one or two events that happen randomly. You can bend the rules to fit the past data, but they will fail on the new data. If you change the time frame or year or market condition, your perfect strategy just breaks. And if clean, objectively fast code cannot reliably read these patterns, what exactly do you think people are doing drawing manual lines and shapes and determining support and resistance and trend lines and change of character and break of structure? They're just random patterns that appear sometimes, and most times they will not work as expected. They work 2 times and fail 10 times. That's not strategy. That's not. And when you factor in trading fees and spreads and slippages, those tiny theoretical profits disappear very quickly. The reality is roughly 70 to 90% of retail day traders lose money over time. Most people who try to become day traders will not consistently be profitable. And if you think that, oh, I will be part of the 10%, I'm different, I'm smart, I am this and that, you are thinking exactly what almost every losing trader thought at the beginning, including me. You think that you will be part of the 10%. Really, it takes years of practice. It takes serious disciplines. It takes painful losing streaks, constant tracking and adjustment. You have to be obsessed, and every step of the way you are burning your hard-earned money. And even then, 90% failure rate means you will almost certainly fail. So to make it worse, we have this whole ecosystem built on selling you shortcuts, these magic indicators and holy grails strategies, courses on top of more courses and books. I actually bought a trading bot that promised $20 to $50 in a day. So if I traded with around $2,000 capital, so the first week I was actually making $30 to $60 a day. So I genuinely thought I had cracked it. I was planning on how to open even 5 more accounts so I could be making about $200 a day autopilot. I was already dreaming of my Lambo. Then 1 week later, my $2,000 was less than $500. I almost lost everything that day. Luckily, the market reversed at the last moment and I barely survived. I thought, oh, that was just a one-time unlucky event. But it happened again after a few weeks. Then that was when I shut it down and I accepted it was a waste of money. I was lucky enough to not lose my capital, but I lost my entire profit. The easiest shortcut to make money in Forex is not by trading. It's by selling courses, indicators, bots, and mentorship. It's just the hard part. Even after the years of pain and finally becoming good, exceptional traders might make, let's say, 10 to 30% on their capital. Many solid traders make less than 10% per year of their capital. So compare this into, let's say, something as boring as an ETF, S&P 500 index over the long term. Historically, you can get similar returns around 7 to 10% average per year, and you do not need any chart reading or losing your sleep or destroying your nerves of paying spreads and fees. You do not burn years of your life trying to beat professionals. And no, prop firms don't magically fix this. Prop firms you will pay to take a test and strict rules. One bad day, you are out. And these rules are often designed so that most people will fail. Even if you pass, it's very hard to keep it going on the long term. Maybe there are a few people genuinely making money from day or swing trading. They exist, of course, but the industry around it is filled with scam artists selling false hopes and holy grails that don't work. They're using rented cars and fake screenshots to impress you. For the vast majority of people, you will waste your time, you will waste your money, and you will live with emotional scar. And even if you have spare cash and you're not trying to become full-time professional trader over many years, you have simpler, safer options. Long-term investing in broad ETFs or index funds or fixed deposits, they are actually very boring. They give low yields, but they are effective and they require zero effort. I also have about 5 years experience with crypto, and my thoughts on that deserves its own video. And if you're interested, please subscribe to this channel and check out my channel for that other one. And if you've watched this far, please subscribe if you want more honest, no hype videos just like this. And tell me in the comment section, have you ever tried Forex or prop firms? How much time or money did you lose? Are you still in it? Are you making profits? I will be reading the comment section and I might turn some of your stories into future videos. See you in my next video.